Hi, this is Greg Reese with Reef Point. I'm just here to answer a quick question that we get frequently, and that is whether or not the Deferred Sales Trust can be integrated in a transaction that involves a seller carryback arrangement with the buyer. The answer to that question is yes, and there's actually three individual circumstances where that might apply. Number one, the Deferred Sales Trust can integrate and actually service a seller carryback note for the seller. Number two, the DST can integrate into the transaction to defer all of the cash that's coming at close, but the seller possibly could service or self-service the payments under the seller carryback arrangement. Or three, if there's a balloon payment due, either from an existing structure or maybe an asset that you previously sold but are still carrying a seller carryback note of 20, 30, 50% of the sales price, the DST could step in to help you continue to defer those payments. So going back to the top, number one, if there's a seller carryback, the DST can service that note instead of the seller directly servicing that note. Typically what would happen is the seller may not need all of the payments that are coming in on that seller carryback portion, and they may wish to have the DST receive those payments, no tax implication involved, and then redistribute immediately back to the seller some lower portion of those payments so that the excess amount that you really don't need for your lifestyle can be reinvested for you to be taken at a later date. Number two, it could be that the seller carryback portion of the sale involves a payment stream that the seller actually needs and wants, and it's necessary to support their chosen desired lifestyle. So in that case, the seller could self-service the seller carryback portion while the DST is deferring all of the cash that came at the close. And keep in mind, if there's a balloon payout, either at the end of the scheduled term or maybe as happens frequently, the seller will look to refinance and pay you off sooner than expected. So that involves a lump sum that you would otherwise ordinarily be taxed at. So the DST could step in at that point for that portion to continue the deferral and to give you the opportunity to have those proceeds reinvested in a more diversified, more liquid way, or any other way that really is suitable for your needs and objectives. This also applies to a transaction you may have already closed and you carried some seller financing on a closed transaction. Well, same thing applies. If a balloon payment is coming out, you're notified by the buyer that they're going to refinance and pay you off, maybe sooner than expected, maybe at maturity. In that instance, if we act in advance of the payoff, we can help you to continue to defer the balloon payment proceeds in the same way that I just discussed. Thanks.